Very good morning. Welcome to Chartbusters. Well, the initial dip got bought into earlier this morning, but that as well has got sold into in the last 10 to around 15 minutes or so. What stands out though? The mid-cap outperformance. We're down only around 0.2%, while the global markets have been very jittery, and also our markets now are down close to around 120 points. Hey, Mangala.
Hi, Nigel. Let's see where we go from here. But, the mood is definitely defensive, and that's what we've seen in the outperformers in today's trading session as well. Case in point, the FMCG stocks, which are doing extremely well. As you see, the dip was bought into, and then it has been sold into. Close around that 17,600 mark for the Nifty. The FMCG index holds steady. First up, all the top stories that we're tracking today. The markets opened lower, then we saw a recovery, and then it's weakening once again as global equities sell off after the US Fed pledges to hike rates until inflation is brought under control.
Brokerage house Citi initiates coverage on Aptus Value Housing with the buy rating, sets the target price at 425 rupees, citing quality underwriting skills, and projects a 29% compounded growth in AUM over the next couple of years.
Fortis Health trades higher ahead of the Supreme Court's verdict on the IHH open offer case due later today.
India Cements exits the F&O ban list. Ambuja Cements has been included. Both stocks trade more or less flattish as we speak.
It's a boost for GNFC as the Finance Ministry approves the continuation of anti-dumping duty on imports of TDI, which is a key product of the company.
All right, well, we're down close to around 120 points as we've been mentioning. The number of stocks advancing are still more than the number of stocks that are declining. But just a short while back, actually, the mid-cap index was pretty much in the green. It was up 0.3%. Now, those two lines are getting a little bit closer to each other. So just keep an eye out on that front as well. But you want to understand what do you do from here? 17,600 on the Nifty. Sachidanand joins. And hi, Sachi. Morning. What's your take? If you bought the initial dip, you'll be very happy. But that joy was short-lived in case you didn't, get out of it. Because we're back towards the low point of the day. At around 17,600, do you believe risk-reward favors a buy? Or do you think that we're likely to slide on maybe a couple of 100 points even from here on? Go ahead.
Good morning, Nigel. Nigel, in fact, yesterday we talked about these levels and we were expecting the Nifty to fall back to 17,600 levels, where we, see as this particular level as a very dependable support. So probably because of the morning, reversals that we have seen, probably we may drift towards 17,540. I think that will be a good level to accumulate longs for the Nifty, keeping a stop loss somewhere close to 17,520, 510. We are expecting the expiry to again shape up above 17,650 zone. So I think this level of 17,600, 17,540 should hold on throughout the day. When we look at Bank Nifty, again, yesterday we said that on the weaker side, Bank Nifty could slide towards 40,500 kind of a zone. So probably that particular decline may continue. We are still not seeing, very strong reversal formations or strength when it comes to Bank Nifty. So probably this drift can take it towards 40,300. I think that will be a good support for the day. And on the higher side, we're expecting the expiry somewhere close to 40,800 to 41,000, in this particular zone itself. So I think buy on declines in the second half should play out well, but I think the preference should be on Nifty. I think 17,540 is a good support, wherein Nifty can be bought in with a stop loss at 17,510 for a target of around 17,650.
Take that point on the index, Sachi. Thanks a lot for joining in once again. I'm looking at a couple of stocks, and two sectors really stand out on the way up in today's trading session. It's the FMCG pack and it's the pharmaceutical pack. We have Strides Pharma, Torrent Pharma, both of them at the high point of trade. We have Ipca Labs, Metropolis Pharma, and Ancillary basically doing well in today's trading session. And the FMCG stocks, they've been doing well for the last few trading sessions, yesterday as well, and that continues into today. Are your picks in these two sectors, or do you have some different picks?
Good morning, Mangalam. Yesterday we discussed the setup of HUL, and I think we would continue to be within this particular framework itself. I think FMCG stocks are trending well, and the supports are being held on well. The reversals are very significant. So I think from this particular pack, the fresh stock that has hit our radar is Marico. If you look at the entire structure on the daily scale, we saw a confident V V-shaped recovery. The stock has managed to break out from 10 weeks of consolidation. So entire setup looks promising. We are expecting this particular move to continue towards 555 zone. Positional target as per the pattern is placed at 570. So Marico can still be accumulated with the stop loss at 536. And the second pocket of strength, or probably which is showing some resilience, is IT. In fact, despite of this particular weakness, most of the IT stocks have managed to hold themselves above their previous day swing lows. L&T technology services is something which is showing some significant developments. So when we look at the 5-day exponential moving average, it has been trending near that particular level. We have seen 60 minutes charts, the consolidation getting mature, and an over addition of 6% is indicating that probably we may see a breakout in this particular counter zone. So L&T technology services can be accumulated here from a trading perspective. Stop loss should be placed at 34.20, and momentum target could be placed somewhere close to 35.80, where its 20-day exponential moving average is placed.
Take that point, Sachi. Thanks a lot for joining in, giving us your views on individual stocks as well as the market. With that, we shift focus to a special segment where we get you ideas for profit coming in from our colleagues at Money Control Pro. Nandish Shah joins in with a stock.
Today's ideas for profit is Midani. Midani is one of the leading manufacturer of special steel, titanium alloys, super alloys, catering mainly to the defense, space and energy segment. Revenue for the June quarter were flattish year on year, while the value of production grew by 100%, which suggests better numbers for the September 22 quarter. Rohtak plant in Haryana for manufacturing bulletproof jacket has been completed, and the company is sitting on an order book of Rs 100 crores currently. The company has completed the capex for white plate mill at Hyderabad. Midani was outsourcing its requirements for plate mill, and now with the in-house production at full capacity, it would be able to save 60 crore per annum from this facility. It has completed the capex for the spring plant with a capacity of 60,000 springs per annum and has already received few development orders from the railway board for the supply to coaches and wagons. Midani is a play on increased indigenization in the space and the defense segment. With large capacities on stream, Midani has started targeting the export market. Export turnover for FY22 was at 87 crore, and we expect export revenues of around 150 to 175 crores for FY23. With capex almost completed, except for the joint venture, we expect double-digit revenue growth. Based on our projections, Midani is currently trading at a P multiple of 18 times FY24 earnings.
Well, we've been waiting for, the details on Fortis, and turns out that the street does not like one bit the comments that have come in from the Supreme Court. Just a few things that we have that Ashmit, our correspondent, has said to us. He's saying that the Supreme Court orders continuation of the stay on IHH open offer, and that's a negative surprise because most on the street were hoping that there would be some respite coming in out there, and that would be a massive overhang that would have gone. But turns out that no, the stay on that open offer will continue, and that's perhaps we've seen that sharp adverse reaction on the downside. A 6% dip is what we're seeing, Nigel.
Yeah, that's right, Mangalam. Two negatives for me out there. One is they're talking about a forensic audit to be conducted on the deal, and they are also the High Court to consider appointments of forensic auditor whether such transactions were bona fide. So that's point number one. And the second factor is there's no relief that's come on the open offer front because the Supreme Court, they have, there's a stay on the IHH open offer. That will continue, and that's a setback in itself.
And
the Supreme Court has directed the Delhi High Court to consider appointments of forensic auditor. Ashmit joins us. He's bringing us all this information. For the time being, the Fortis stock has sold off big time from the day stop. Ashmit, fill us in.
Well, let's keep in mind that this Fortis IHH deal, which transpired in August of 2018, has been in the wings for a very long time now. IHH acquired 31%, $1.1 billion. The key aspect, however, was the open offer of 26%, which the Supreme Court had stayed in December of 2018. Now, what's important is that IHH finds itself in the middle of a tussle that features Daiichi as well as the Singh brothers and, of course, Fortis. Now, what's important is that Daiichi essentially has argued that there are a number of vagaries, there are issues with the deal itself in terms of shares owned by the Singh brothers being pledged before certain lenders and then subsequently featuring as a part of the deal. Moreover, there have been questions that the Supreme Court has also raised in terms of how these share proceeds had been utilized and how they had been dealt with. And on account of that, the Supreme Court has said that at this stage, It will not be taking a decision on how to proceed with this matter. However, what it has said is that the Delhi High Court, which is the executing court in this case, will now go ahead and decide on the future course of action. What that effectively means is that the Supreme Court has not cleared the IHH open offer, has not lifted the stay, has not vacated the stay. It has simply now shifted the burden now to the Delhi High Court. The Delhi High Court will be the one that will now decide on the fate of this open offer. But not just that. What's important is that given that previously the Supreme Court had expressed some reservations and concerns on the bona fides of the deal itself, the Supreme Court now has gone ahead and suggested to the Delhi High Court on appointing a forensic auditor to verify these transactions.
Okay, all right. Ashmit, thanks so much for joining in and filling us in with those details. I believe we have Mr. Ranina as well, who's joining in to give us his first take. Morning, Mr. Ranina. Thanks so much for joining in. Well, a couple of negatives coming in there. They're talking about reporting, about appointing a forensic auditor. And the second factor is there's a stay on that open offer. They continue that as well. What's your initial reaction on this front?
Well, I think the Supreme Court wants to allow the stay to continue. Let's take a piece. Will not vacate the stay. So I think the show has continued.
I think we've got you on a bit of a scratchy line, Mr. Ranina. We'll just try to repatch that connection with you. But currently, the fact that the Supreme Court has announced this stay, the question is whether there could be any, legal recourse on it or not. But there's been a violent reaction on the downside for Fortis. Now the cuts have, moved into double digits as well. 11% cut on the Fortis stock itself. Let's go across to Ekta once to understand how this would impact the business of Fortis going ahead. Ekta, this was a major overhang. It was expected to lift, and turns out it hasn't.
Well, yes, definitely a disappointment which has come in for the shareholders, for Fortis, as well as question marks on whether or not IHH would actually reconsider the amount of commitment they have shown towards the entire Fortis deal. So, for example, if we have Mr. Ranina on the line, I just wanted to ask him a question with regards to the particular deal. Mr. Ranina, now as Ashmit pointed out, it's probably going to go back to the Delhi High Court from the Supreme Court. And they have said that one needs to probably consider a forensic auditor when it comes to this particular deal, IHH, and how they in fact won the bidding process in 2018. What do you think would be the process going forward? Because at that point in time, this was a very well publicized and scrutinized deal and bidding process. So in your opinion, what can we expect now?
No, it will. The Delhi High Court will go ahead with the appointment of the forensic auditor. Of course, the other side can also suggest a name, and once the two parties suggest a name, they will decide on the forensic auditor, and then the work will commence. So I think the matter will go on for a few months until the report of the forensic auditor is obtained. And there again, then the Delhi High Court will come to a considered view. Subsequently, again, the matter will go back to the Supreme Court if any party is aggrieved by the Delhi High Court verdict.
Okay, so is there a possibility that IHH's shareholding of 31% could then be questioned, and there could maybe be what could be the most adverse outcome? I'm just stopping short of saying whether or not there could be any kind of rebidding process in any form or manner. Would that be a possible adverse worst case scenario that we should probably consider?
No, I don't think so, because the shareholding issue will, I don't think, be considered by the forensic auditor. Forensic auditors go into the accounts and other issues. So long as the shareholding is intact, if at all somebody wants to change the shareholding, he has to go to SEBI, not to any auditor or anybody else. So shareholding pattern will not be disturbed by this forensic audit.
Okay. How soon do you think we could probably hear on the open offer details when it comes to the Delhi High Court? And what could be the biggest reservations or roadblocks? Because this Supreme Court hearing has been going on since December 2018. We're in 2022. Give us a sense in terms of how long could it probably take for the Delhi High Court to come to a resolution, at least when it comes to an open offer. Would it then be after the forensic audit, logically?
Yes, it would be after the forensic audit. So it all depends on how long the auditors take with their forensic audit and give their report, which then will be submitted to the Delhi High Court. I think once that is done, the Delhi High Court should be able to dispose of the matter within a matter of a couple of months.
Okay.
So really the timeline is with the forensic auditor and how soon they can give a report.
And how would the forensic auditor be then chosen? What would the process on that be?
Well, both parties will be asked to give their names, and in probability the High Court will then decide the if it is available. If forensic auditor.
It's still a little unclear on as far as the line's concerned, but we did get a lot of what Mr. Ranina had to say. We also have Sriram Subramanian, who's the founder and MD at InGovern, joining us on the phone line. What do you make of this? Your initial thoughts, Sriram? It looks like the can has been kicked down the road for all those who were hoping for a favorable resolution, the shareholders, that is.
Yeah, good morning. Yes, we had asked for a forensic audit in 2018 itself, much before any of these took place. And obviously, it's been stuck in courts and nobody seems to be interested in pursuing this in haste. And at the end of the day, even if an open offer is made, the open offer is going to fail anyway because the price which IHS is offering is it's just a procedural matter. What was important was a forensic audit to determine what is the flow of funds, whether IHH was in collusion with the promoters of Fortis in the first place when they acquired the shares, what is the amount that they paid to the promoters. All these issues should have been sort of resolved in post-haste, I would think. And 4.5 years down the line, we are still at the start. That is a tragedy.
Sriram, let's talk about this back in 2018. I remember clearly that this was a very clear-cut bidding process which took place. It was highly publicized at that point in time. There was a new board in place as well. We had a new constitution of complete independent board members. So it was a very clear-cut, publicized deal. So in that context, what do you think of forensic audit will probably throw up, and what is the risk of the forensic audit at this point, according to you?
No, see, both could have been done parallelly. I mean, the open offer could have gone ahead as well as forensic audit could have been done parallelly into the funds which were there, even into the embezzlement of funds from Fortis before. Now the risk is obviously one is IHH is going to lose interest in taking the company forward. Two is if any further investment needs to be made, probably that will also be held back. So the company is just going to be where it is, and no growth at all.
Okay, Sriram, I just wanted to bring that point forward because that's been the big point of contention, that, IHH's commitment might be questioned now to Fortis simply because of the to and fro when it comes to this particular deal. So, however, since 2018, if you chart the performance of Fortis, it's actually been only on an up move. If you look at the Q1 FY23 numbers, they recorded some of the best statistics in terms of, their surgical revenue. Their margins have improved in terms of the hospital business. But yes, do you think that IHH could probably put their stake up for sale simply because of this kind of uncertainty which has been going on since 2018?
No, that would be too thin a skin for IHH to let go, where they have already invested millions of dollars. So I don't think they will walk away so soon. But at the end of the day, they also would like to see this entire forensic audit behind. So they should also work with the authorities to ensure that the forensic audit is undertaken in quick haste.
Okay, but Sriram, at this point in time, what would you be probably recommending to your clients when it comes to Fortis? Hold on to positions, sell the positions you have, buy further. What is the advice that you're probably fielding right now or giving to your clients in terms of the key questions they have?
We don't usually make buy, sell, hold decisions unlike the equity research analysts. So I will ask that question.
Right. Thanks so much, Mr. Subramanian, for joining in and filling us in with your quick comment. And thanks, Ekta, as well, for joining in. Well, Mayuresh Joshi of William O'Neill as well joins in. Mayuresh, what do you do with the stock? You know, currently it's getting pummeled. It's down close to around 14%. The hope was that there will be some relief and there will be a re-rating. Now, that's not happened. What's your view from here on?
Good morning, Nigel. No, absolutely. I think that was hope, right? And hope is the right word that you probably used. But with the kind of judgment that has come in, I think the overhang probably still persists onto the stock at this point of time. I was hearing Ekta out in terms of the numbers that they have posted. So no two ways about the numbers, Nigel. The plans that they've got specifically after Q1 in terms of adding on 1,300, 1,500 bed in the next 4 years by brownfield, the international contribution expected to reach 12% from 7%. The diagnostic business guidance has been maintained at 22%. And the capex is at 400 crores with equal proportions for growth. So in that sense, I think the core parameters are showing signs of improvement. But with the kind of overhang, specifically in terms of this judgment that keeps on continuing for the stock and the price performance that has got exhibited specifically after the judgment, I think it's better to hold up. Just to wait out for the stock. Currently holding out a very neutral kind of a view, specifically in terms of the judgment in question.
Mayuresh, you know, I just had one quick question. Do you think that now with the kind of interest we've seen in the healthcare space, there's so much interest in terms of new players entering the market? Adani has formed a new subsidiary when it comes to healthcare. Do you think that Fortis could probably become an acquisition or an M&A potential play simply because of this kind of uncertainty and maybe IHH's possible frustration with it?
That could be a possibility, Ekta, but I think it's too speculative at this point of time. But yes, for the space in general, I think the kind of macro factors that are working in its favor, both with an asset-light model that a lot of players are pursuing, medical tourism coming back with a bang, we're probably seeing a lot more happening in terms of the new hospitals actually contributing, with opt-in surgeries actually accelerating over the last few months and expected to do so over the next few quarters. And the pharmacy and the diagnostics business holding on for these hospital chains as well. So I think as a space, I think there is sufficient enough of triggers going forward. But I think it will be quite speculative in terms of whether anybody probably gets into what is for the next few weeks, months or whatever.
All right, Mayuresh, thanks a lot for joining in. The short point eventually is that the shareholders aren't happy at all with this pronouncement that has come from the Supreme Court. And we can see the result down, the stock down almost 16%. In fact, in this swoop itself, it's turned negative for the year. And before this, there were a few long positions being added on Fortis. It was just around 4 to 5% away from its 52-week high. And today we've seen a near 50 rupee correction on the stock price itself, down virtually at the low point of trade with a cut of 16%. So that's about Fortis for now. We take a short break, come back, talk about more news and updates on the other side. We've seen some recovery for the markets from the lows, about 20-25 odd points, and that's courtesy the IT index, which is currently at the high point of trade. But what's at a record low is the rupee over $80 once again. Lata is here to tell us more and whether rupee will settle above the level of 80 and if that is the new normal. Lata.
Well, the market began today by wondering if RBI will let go of the 80 rupees to the dollar mark, and that question has probably been answered. Up until yesterday, the RBI was defending 80. It had allowed a gentle depreciation in previous few weeks, but yesterday, it ensured by selling a goodish bit of dollars towards close of trade that it ends at 79.97 thereabouts, didn't end at 80. But clearly now that barrier appears to have gone. I mean, it's still very, very early days. So the next question in the market's mind is, where will the next range settle? Does it go all the way to 81, 82? The market will look for whole numbers, maybe even 80, 50. What we have to note is that today's let go by the Reserve Bank appears to be dictated by the Asian currencies. Almost all Asian currencies are weaker by about 0.5 to 1% versus the dollar. Most important is the depreciation we have seen in the yuan, not just, I'm not speaking about today or this week, but over the past 2 months. The yuan was, the rupee was at, 12 rupees to the yuan just in March. and then it appreciated to about 11.8 to a yuan in about July. But now it is 11.3 to a yuan, because the yuan has gone all the way from 6.5 to 7.1 versus the dollar. It depreciated lockstep with the dollar's appreciation. The rupee did not depreciate, and now we have the highest trade deficit with China. It would make sense to allow the depreciation. My sense is that also may have moved the Reserve Bank's hand. Just one point in favor of those who are arguing against depreciation: it does mean a weaker rupee will mean more inflation problems for the Reserve Bank. It will also mean volatility, because where do you settle now? Exporters until now were selling at 80 because the RBI was defending it. Now, if they don't sell at all, does it mean a lot of instability and it goes all the way to 82, creating problems in its wake? So we have to be prepared for a kind of volatile life. So the search for the market here on is what is the next range.
Okay, all right, Lata, thanks a lot for that. Well, we'll have a wrap up on this edition of Chartbusters. You don't go anywhere. Trading Hour comes up next.